Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today's Friday, August 15th, 2025. Ron Quaranta here with my amazing friend and co-host, David Brill. Our dear colleague, Joshua Ashley Clayman, slightly under the weather today, couldn't join us. She'll be back next week. Feel better, Josh. You will be missed. Before we begin, our usual disclaimers. Thank you all so much for joining us. Please keep in mind, nothing that David and I are going to be discussing is any sort of legal or investment advice. And really what we discuss are our own personal opinions, don't necessarily represent the opinions of our firms. David, another busy week. I think you and I shared something like 50 different text messages on different market moves, and particularly when we look at things like, some of the economic data that's come out there. David, let's start with the markets a little bit. And there's certainly the regulatory and legislative stuff we should look at. We hit an all-time high. I think it was a 52-week high on BTC. Correct me if I'm wrong. I think we broke 124. Ethereum really kind of pumping up. I think we saw record inflows into Ethereum ETFs. I want to say risk on. Shout out to Josh, who can't say risk on with us. Is it risk on? We can't seem to hold above 120 for any consistent length of time.
Well, look, I think, we always have to remember we've come a long way, and there's always some consolidation. And also I think we've seen, and, we'll see how it plays out with Ethereum too, but long-time holders, when we hit all-time highs, are selling. And so that's creating, sometimes you see when you're in price discovery, you see, a stock that will just continue to go higher. But with crypto, a lot of times we're just seeing that this is a strategic time for long-term holders to sell. And look, if somebody's had diamond hands and can hold for 10 years, we can't really begrudge them for selling.
No.
That being said, that's kind of been the pattern that we've seen. And it's kind of the pattern that I would expect to see with ETH if we break through, or when we break through, being positive, to an all-time high, that we may see some sell-off. We may get to 5,000 and we may see a sell-off from there. So there's also a little over 3 billion that's in the queue to be unstaked on Ethereum. So that could also be some liquidity that may just look to take advantage of these higher positions in the market.
Yeah, David, I'm with you. And we've often spoken about, how do the ATHs hold? And I'm with you. You can't really begrudge someone for it. Again, this isn't investment advice. If this was the equity markets and you and I were up 50, 60, 70% or more, call it a couple of $1,000%, it'd be foolish for us not to take a little bit of money off the table. I know you spend a lot of time, David, looking at the options. I've been trying to track some of the options and where the price points are. I'm curious about your thoughts. Are there options markets evolving rapidly enough to accommodate the money inflows we're seeing for BTC and ETH? I know you track where are the expirations. I thought I saw 130s plus on some of the expirations.
I think that might have been for the end of August, Ron.
Yeah.
But I do, from what I was reading, is that some of the, that the number that they were really focused on for BTC was like 117,000. That's kind of like the maximum pain area for option expiration today. And lo and behold, as I'm going to just pull up here quickly,
where we're at.
We're right near 117. We're at 117,207. So, I think there are numbers that get gravitated to it. I don't want to be a conspiracy theorist, but there are times where, big players are out of position, benefit from seeing the price go down so that they can, close out positions, get neutral, or, build positions, but build it in a way where they're not, in the red for a certain tranche of trades.
Yeah. David, also, I'm with you on that. It's interesting to me. It makes me think, and I'm ripping up the script again on us. It makes me think of the activities of markets. You and I come out of, call it TradFi broadly across different professional verticals. And it makes me think of like activities of the market makers, for example. And it makes me think of that institutional side. I feel like there's a lot of pent up institutional interest post the summer. And I'm wondering what your thoughts are, because we're seeing more and more market makers available to step in on behalf of institutional players. Are you seeing the same thing? Is that a natural evolution for us?
Look, this ecosystem is growing. And you also can't forget that overseas, I think the actions we see sometimes are here And then, trading overnight in Europe and Asia, is sort of a whole different
Right.
beast. And, you almost have this bifurcated market. Like sometimes one market will be selling in the evenings and buying during the day and vice versa. So you really have this interested bifurcated market. You have people doing perpetual swaps and futures. And so, that's another element into it. And I think in any market, we all kind of know that, especially with these higher leverage situations, that the market tries to like take out those positions, whether they be, shorts or longs. And so they're always sort of chasing those positions. And I think we see that more acutely in crypto than in other places.
Yeah. And look, when we look at that as reflected in price action, one of the things I very much focus on is where we see those support levels. And you and I have been talking about support levels for, I think, a decade. There would have been a time in the past where we would have said 100K Bitcoin as a support level or 110, inconceivable, right? It's we were down in the 30s, 40s. Bitcoin generally is holding well above 100K. So let me ask this question, and I'm trying to debate this into my own mind. Is this a reflection of digital asset treasury companies and the holdings associated with that?
The digital asset trading companies have added this whole additional layer of demand. And I think it's like two levels. One is the actual buying that's taking place on an ongoing basis, but also sort of, you have this overhang of, hey, these companies are raising, X amount of million or $1 billion to buy more. And so you don't know when they'll actually raise the money and go into the market, but you know that demand is there. So I think that's also a little bit playing on the minds of people who are trying to be very short in the market, that there is this demand that exists that's coming at a certain point. And look, Tom Lee, has this company. The thing is, I know the symbol is BMNR, and I'm not saying to buy it. I'm just sort of talking about it.
Yeah.
But he's been out there talking about raising $20 billion to buy Ethereum with. And that 20 billion, a potential 20 billion purchase of Ethereum is a very significant amount. I don't know if it was 5% of the market or whatever it was. That's a very significant amount. And if you are thinking about Ethereum and knowing that those kind of purchases are out there, because he's not the only treasury company, then you really have to think about what are the prospects for Ethereum, sort of on the perspective of, that there's some big buyers out there.
Yeah. And shout out to Tom Lee. I mean, this is not a fly-by-night person. He's been involved for a long time and has deep expertise in the market. So kudos on some of that. But that brings me to an old debate that you and I have had. And I'll come back to the kind of the market action in a bit. Why Ethereum and why now? And the argument I make is, and it's probably a fading argument, is that Solana is a viable contender for some of the L2 activity we would see in TradFi. 6 months ago, you and I were having conversations about Ethereum might not make it, or at least might not make it from a functional L2 for, call it, financial markets. Clearly, that's wrong. Why is that the case, though?
Well, look, we've talked about this, and I've always been a believer in Ethereum, and that it could be the backbone of the next wave of the financial ecosystem. Look, this is not different than the tech boom, 20 years ago. There are going to be winners and losers. And look at the winners, Amazon and Google and some of those companies. And so I think in our ecosystem, it's growing, and there are going to be some winners and losers. And I also believe that Solana and Ethereum can both be winners, and one doesn't have to lose at the other's expense.
Right.
But I think one last thing is that, we don't really have SOL ETFs right now. And really, we cannot underestimate the value of having a wrapper, an ETF wrapper for Bitcoin and Ethereum. And that it's something easy and comfortable that people can do. And, for those wirehouses or those banks or broker dealers that allow people to have access, it's very easy. Or Robinhood, for instance, you just put, 5% of my paycheck goes to Robinhood to buy Bitcoin and Ethereum, and it's sort of on autopilot, and, it just keeps going. And so you have that effect too.
Yeah, and look, I none of this is investment advice for anyone watching, but I have certainly come away from the analysis, David, that you and I have done, much more favorably, perceiving ETH much more favorably in Ethereum as that L2. And I agree with you, a SOL ETF, which I think, correct me if I'm wrong, someone in the audience, please correct me if I'm wrong, the SEC has delayed approval of a SOL ETF. I haven't dug into the details of that. But again, to your point, David, we've seen this play in the past where ETF opens up flows and definitely directly impacts price. For everyone in the audience, thank you so much for joining us. If you've got questions for David or I, please put them in the comments section. We don't have Josh with us today. I hope she's watching. I hope she's feeling better. David, there's a tangent to all of this that we need to talk about. And I want to be very careful about how we talk about it. When we look at digital asset treasury companies, tell me if you disagree. In my mind, it's a different thing to talk about a BTC treasury company and strategy and the others, or an ETF treasury, or even a SOL treasury. When we start, and I've used this phrase multiple times this week, down the quality curve of digital assets, are you concerned about the proliferation of digital asset treasury companies?
Look, I support them, and I support access for folks to have access to different, cryptocurrencies in a traditional ETF wrapper. I think, look, I've been a personal believer of, what will the market bear? Is there, interest in these companies? I think the question that I have, and I think a lot of people have, is how do you value these companies?
Yeah.
And why are you going to buy a treasury company ETF or a treasury company stock versus buying the underlying? And now in some cases it could be because you can't buy the underlying. But if you do have reasonable access to the underlying, well, why buy the treasury company? And again, I think it really comes down to is the stock price going to be NAV? Is it going to be a premium to NAV?
Yeah.
And if you are paying a premium to NAV, what are you paying for?
Yeah.
So I think that's it. But how do you think about it, Ron? Like, do you think this is just expanding the crypto ecosystem, or how do you think about it?
Yeah, it's an interesting point. We actually had a meeting earlier this morning, one of the meetings from yesterday, and someone raised the idea that, well, again, just speaking out of turn a little bit, this feels a little bit like ICOs. I think it's a very different thing. I am broadly supportive in my own personal capacity, David, as you know, of the digital asset treasury companies that have value and represent what they're doing and have a use case that demonstrates that. I mean, you can argue what you want about Michael Saylor, and we can talk about the different ways he finances it, but I think he's got a good argument about BTC as a treasury stock. I think you can have that conversation about ETH and SOL, but to me, it is caveat emptor across the board for anything outside of the deepest liquidity digital assets. And I think you're right. It is a way to get exposure for those who might not be able to get exposure. Buy some strategy on the market in your Schwab account versus not being able, for whatever reason, to buy it, buy BTC directly. And will add one more thing to that. You talked about NAV, and you talked about NAV calculations. I would argue the broader the liquidity on any particular digital asset, the more the premium compresses. And I don't remember the latest number, but Strategy's got a really high premium vis-a-vis its Bitcoin holdings. I think that'll compress over time and make it more palatable. Do you agree with that?
Yeah, look, Strategy has really incorporated some innovative financing techniques to access the capital markets and get money very cheaply to buy more Bitcoin. And so, look, I think the way that they're doing that, is worthwhile, and a lot of people think it's worth a premium. So I think you have those first mover advantages. But look, people were buying shares in pets.com back in the day. If you remember in the NASDAQ bubble.
Oh, I do.
And nobody said, you shouldn't be able to have access to pets.com.
Right.
Well, I think this is the same thing. We'll see some innovative companies come up with some different structures. Some will be successful, some won't. If the companies don't, structure themselves properly and they don't have enough sort of runway if prices go down, then they'll have a problem. I just don't want to see cascading selling because, the companies aren't set up in a way that can deal with the volatility in the market.
So, David, I'm really going to throw a curveball at us because I didn't add this for the agenda, and I know you and I have talked about it at the periphery a little bit. How much of this, I was going macroeconomic conversation, how much of this is an interest rate conversation? And hear me out on this thesis. Tell me if you disagree. When I look at a strategy and I look at some of the other publicly traded companies that are holding, call it BTC as treasury, and they've got access to very complicated funding and financing methods. It's stock issuance, it's preferred shares, it's debt, it's different tranches of debt. As interest rates come down, it gets easier and easier for them to more cheaply fund some of their purchases. The other side of that, and I'm completely going crazy here with this, on the stablecoin side of the conversation, lower interest rates compresses margins for stablecoin issuers. Who benefits the most if interest rates fall?
Well, I mean, look, I mean, it gets even more dynamic because think of all the people who save and, who benefit from higher interest rates for their savings account versus, for our government, a lower interest rate means, we can refinance our debt cheaper. So,
Yep. And it's weird, right? It's like, it's not an either or conversation, but it really strikes me that there are two vested interests in the market that are impacted by that data point.
Yeah. I mean, look, if you want to look from a macro risk on perspective for the industry as a whole, lower interest rates and more access to capital, whether it be debt, equity, so on, is better for our industry, and our industry tends to do better when that happens.
Yeah.
And I think for our country, it will be better, ideally, with interest rates going down, so we can refinance our debt cheaper. On the other hand, for those in the stable coin, who are playing with stable coins, it's more challenging because you're going to just get less yield. If you have those stable coins, and I imagine the staking rates will be lower. But look, if you have a treasury company and you're able to stake the underlying asset for 3 or 4%, you could borrow, if you think the price of that underlying asset is going to stay flat or go up, you could borrow plenty of money and offset your borrowing costs with the staking. But again, obviously, you have downside risks.
And look, 2%, 3% ROI is a not bad return for a stable token issuer.
Yeah, and also look, Ether ETFs become even more compelling if people can get the staking revenue and imagine if you can get a fixed income like return, and on top of that, get to hold an asset if you believe in that asset that has, the ability to be, a real, I won't call it a growth stock, but really be like a growth company. It's giving you a fixed income yield. That's a very attractive product. And one other thing I would add is that I think staking, I think entities that are doing staking and can offer that to customers, I think that is also very attractive, because if you believe in the ecosystem and you're comfortable with the way these assets are staked, there's a nice stream of revenue that comes to those people.
Yeah, look, I'm with you. And I think I am, again, speaking in my personal capacity, broadly supportive of what the quality players in the space are doing. And I think the other overlay to that, David, is as stablecoin users have greater usage of it, meaning there's more to do with the stablecoins themselves, which brings me to the next couple of topics that we got to really address, which is, once Genius Act passed, you and I saw the articles in the past couple of days that talked about some of the banking industry and some others pushing back, saying this is not good. Basically, Genius needs to be redone. And it really struck me. I have colleagues in the space that basically really, at the crypto space, who looked at it and said, well, look, the incumbents fighting back. They don't want this level of engagement with the public in things like stable coins. I don't know if that's the argument, but what did you see?
Well, I briefly read this X post by Austin Campbell, and I just didn't get a chance to because there's so much going on this morning. But, all players had quite an opportunity to weigh in on the different, provisions in the Genius Act. And so I'm not necessarily, as I think about it, just broadly speaking, I can understand why people don't want, some entities to get a second bite at the apple. I think ultimately people want choices, and people want access to, have some of the benefits from holding stable coins. And, I think also, these companies have been able really to keep all the proceeds, that they get, whatever they're holding them in, they're not needing to share them with people. And I just think there should be opportunity to do that. And so I think that, We'll certainly see how it play out, but I don't think that those lobbyists who are looking for changes didn't have a chance to propose their view of the world in the first go around. And so, I mean, what do you think, Ron? Do you think there should be a second bite of the apple on this?
Look, I'm going to say something that's going to sound a bit anti some of the incumbents, and I certainly don't mean it to be. You had an opportunity to weigh in on this. You had an opportunity to participate with industry. You had an opportunity to work together to put some of these thoughts in front of Washington, and you didn't. And if the idea now is stop innovation in the space, we both know in the long term that's not sustainable. You won't be able to stop the innovation. You'll just disenfranchise people who should have access to some of the things they should have access to. And again, I want to be clear, David, that doesn't mean every single person I know should be buying into crypto or stablecoins.
Yeah.
Well, it's, there's a bit of caveat emptor, but there's also, you should have the freedom to participate in some of these capabilities. I'm with you. It'll be interesting to see where this goes. And I think there's still a lot that needs to be accomplished. Look, we're in the middle of August. Congress hasn't returned. We're talking about Genius Act, but we still have a long way to go in market structure. I think there's work still to be done there. And I think that informs where some of these discussions go in the long term.
Yeah. Look, stable coins can be really helpful, like transacting internationally and not having the Forex, issue, the speed of it. I like the idea that some of the stablecoin providers are creating their own blockchains. At first I was wondering, well, why are they doing this? But look, I think if you want to have this sort of investment scale product that people can use, and look, if somebody fat fingers a transaction and the ability to pull that back with stable coins, I think that's it probably goes against the sort of crypto ethos, but for this use case, I think people could get comfortable with that.
Yeah.
Because I think if the intent of one party is to send X amount of stable coins to the other, and if it's on, we'll say, a Circle blockchain or a Ripple blockchain or Tether blockchain in the future, I don't think it goes against the ethos to fix those transactions, differently than other transactions that happen for different reasons.
Agreed. I agree with you as usual, David. Shout out to Trevor Talley. Thank you for watching. I think we got applause. I don't have my reading glasses on at this point. I can't quite tell what the icon is, but Trevor, thank you so much for watching. David, we have this conversation. I want to say we have this conversation every week. You and I text about it every day at this point. Every crypto conversation is, at this point in our lives, a macro conversation as well.
Yeah.
So look, we looked at some of the data. I'll share with the audience. Retail sales were up, but not up as much as expected. Yesterday's PPI numbers came out, and the market got walloped because it was higher. I think producer prices were 0.9% higher. They expected 0.2. We can get into really esoteric conversations about services prices versus goods prices. David, I'm going to use the word, it's a weird series of data, and it makes me wonder, about the interest rate conversation that we've had. I don't anticipate a huge cut in September. I think we'll still get the quarter point, but it brings us back to something else, which is quality of data. I don't want to have a political conversation about who should or shouldn't be fired. All I'm going to say, David, and I wanted your perspective on this, and tell me if you agree or disagree. It is astounding how the world's biggest economy accumulates data that trillions of dollars of market value are benchmarking off of, or planning and forecasting off of. Am I wrong?
No, you're not wrong. And I think, look, again, we were saying this, when there's a different administration in office. Now we have a new administration. You get, garbage in, garbage out. And I'm not saying that it's garbage in, but if it's not effective or if it's not correct information, and then we have to, have revisions every month, it's not working. It hasn't been working for a while. And look, I think there has to be, in this, AI environment and this data-driven environment, a better way to do this.
Yeah.
Paper surveys and phone calls, there just has to be a better way. Yeah. Look, and I think the blockchain could be a part of that better way. I mean, there just may be a way where people could have have anonymous addresses, and this could be done on a blockchain and you could see some of the numbers. There's a whole host way of doing it, but I understand the frustration of having massive revisions. And, look, we don't know what the effects would be, but maybe monthly numbers are maybe there's just the ADP numbers, and then maybe the government numbers are quarterly. And you may not get the snapshots that you want, but you may get higher quality in a quarterly number than in a monthly number.
Yeah. And I wonder, to that technology perspective, and for folks in the audience, that's a layup. Here's your next startup idea. But, leveraging blockchain to manage some of that data can almost have a level of autonomy to it. And if you get to that level of blockchain usage and autonomy, David, we could be looking at much more real-time data. I mean, literally trillions of dollars in the markets hold with bated breath, on the Friday morning when things like CPI come out or when the jobs data comes out. It makes me wonder, how do markets, including the crypto markets, evolve to consume data in a more real-time way? And the reason I bring that up is we're looking at more real-time markets. We're looking at perps. We're looking at 24/7 markets in certain asset classes. And my argument is the data that we consume needs to match the need.
Yeah, no, look, I agree. I mean, I think it's really, as long as we're making decisions on interest rates based on data that's imperfect, it's problematic. And, I like to joke, we have the receipts to prove it because we've been talking about this for quite a while, but, it is a challenge. And look, I don't think crypto markets will be in the longer term dependent on all the things that, drive the US capital markets. But as you can see, we had an interesting PPI number and then, the markets fell and crypto fell. And so I think one thing to keep in mind is that I don't think one area where this industry isn't mature enough is that if our US equity markets are going down, we still see crypto go down. And so we're not at the point where crypto will be going up if the US markets will go down. I still think they're trading in tandem. Yeah. And so that's something that I think we'll see over time where things will change. But in the meantime, it's still very correlated.
David, I'm throwing it out to the audience for anyone watching. If you've got ideas about it, how to improve that data, send it our way. David and I have been talking about it for a long time, and maybe there's smarter technology people can tell us a better way to do it. David, the background for all of this also is, and you and I and Josh and so many other members of the Wall Street Blockchain Alliance have looked at the regulatory and legislative, and I don't want to go too much deeply into some of the legislation stuff, but there's a lot of regulatory activity that's happening. Yeah. I don't even recall, it's been a blur since last week, if we covered liquid staking, and what the SEC has put forward. But very broadly, regulators are not just more, quote unquote, accepting of crypto. And I know there's detractors for that perspective, but they're much more engaged. I mean, the SEC Crypto Task Force is essentially doing a roadshow, traveling to a bunch of different cities, meeting with smaller startups in the space. Overall, in my opinion, David, good news. What does the industry need to do to make sure that it takes proper advantage of that opportunity?
Well, look, I think everyone is really engaged right now. And, we have to be, grateful that this has been made a priority, in this administration and that, things are moving forward. I think people really can look at what's being proposed in clarity and respond to the RFIs and really, create a dialogue where we can come to some answers. Look, classification of crypto tokens is a thorny, complicated issue. Even if everyone was ideologically aligned about which agency should govern it or not, it's still difficult and thorny. So I think what we need is thoughtfulness and really, but a real understanding. And I think where sometimes it gets lost in the sauce is that we really need to understand it from soup to nuts and really understand, like, when assets go into an ecosystem, how are they deployed? If you're listing a new token, how is that done? Like, really understanding the infrastructure of how these markets work so that we can create laws and regulations that reflect how trading is done and how the movement of flow, the movement of value is done. And I think the two need to marry. And I think sometimes those two don't marry. And, you come up with rules that, intellectually make sense, but then when you try to apply them, it's just more difficult to apply.
Yeah, and look, I make this a holistic conversation in my mind, or in the analysis as much as I can. It's not just crypto. It's like, David, you and I have talked about the pace of innovation is accelerating. So it is the equivalent of these AI conversations happening with regulators and legislators. There's quantum computing conversations that are happening. So we're in this kind of tumultuous time of amazing innovation, and how does the existing world keep up with it is part of what I really focus on. David, we've only got a couple of minutes left. We're going to keep it to a tight session today. For everyone in the audience, thank you so much for joining us. If you've got additional questions or comments, let David or I know, either in the chat, and if we go offline, info@WSBA.co. David, what are you focusing on in the coming days? You and I have a bunch of stuff happening, but I would love your perspective. Where is the Gulf Stream landing next?
Well, this has been a great week. I got to take my daughter to school and get her settled in for her college life. So I've been eminently grateful that we could spend quality time together, and, really excited for her. She really loves where she's going to school. And so that's been a part.
Congrats.
On our crypto side, really watching Ethereum. It's really had a powerful run up. We got close to an all-time high. I'm curious to see, do we retrace here? Do we retrace back a little more? My expectation is, though, that I think that we'll take another run at the all-time high. And I think we may see, we're not going to be betting on this because I don't want to take your money again, but will we see an all-time high in Ethereum at the end of August? So that's something I'm paying attention to. And then also I want to read more about Project Crypto, and just, Paul Atkins was talking that, we don't necessarily need to wait for legislation, that the SEC is in a position to draft regulations that can be implemented. And so kind of curious to see how he's thinking about things and how that might come together.
David, I will not wager you, but I will likewise be deep diving into Project Crypto. We've got a bunch of stuff coming up at the WSBA. For everyone in the audience, we have our WSBA Crypto and Blockchain Summit 2025 happening on October 23rd. You'll get to see David in person, Josh in person, so many thought leaders on stage. Publicly available tickets, so we'll share that in the show notes as well, David. I'm also spending a bunch of time. We talked about some of the technology innovations, and the WSBA, as you know, David, has other working groups, particularly things like enterprise and technology, that is chaired by Sonia Goklani, an old friend and colleague. So we actually have a post-quantum cryptography webinar coming up sometime in September. Shout out to Richard Johnson at the team at Texture Capital and ISEX. Mabel apparently is not happy with post-quantum cryptography. We're also going to be doing one on AI as well. So lots of stuff happening. We're in the midst of, I call it the dog days of summer. I'm not sure if that's technically accurate, but we're coming towards summer's end. It's going to get even busier in the autumn, David. Let's leave it there. For everyone in the audience, thank you so much for joining us. We'll see you next week. Take care, everyone.
Yes. Thanks, everyone. Take care.
Thanks, David. Bye-bye.